Welcome everyone. In the last class we have discussed about the concept of issue of preference shares, and I have mentioned that there is not much of a difference regarding the journal entries or adjustments with regard to preference shares. The only difference is the change in the name. We have done numerous cases and adjustments with regard to equity shares, and the same pattern or question is applicable in the preference shares situations also. The only thing is you need to change the name. Earlier you have learned about many journal entries regarding equity shares. Instead of equity shares you need to use preference shares, and I believe you have gone through the case which we have discussed previously. And after that we have come across another area, purchase consideration other than cash. Actually it was dealt in the beginning of that module, and previously we have done one case study regarding that, and let us discuss one more case with regard to that. After that we will wind up that module. Next case, X Company Limited was incorporated with an authorized share capital of 1 lakh equity shares of 10 each. So a total of 10 lakhs. 1 lakh equity shares of 10 each means total of 10 lakhs. 1 lakh into 10 likewise. So the company has to raise or planning to raise a total of 10 lakh worth of share capital. The directors decide to allot 10,000 shares credited as fully paid to the promoters for their services. And we have learned about the journal entries with regard to issue of shares to the promoters at the beginning of the module. I believe you have gone through those areas. Anyway, we will discuss about that part. Let us continue with the question. The company also purchased land and building from Y Company Limited for 4 lakh payable in fully paid shares of the company. The balance of the shares were issued to the public, which were fully subscribed and paid for. You are required to pass journal entries and to prepare the balance sheet as per Schedule 3 to the Companies Act 2013. And we have discussed about the concept of preparation of balance sheet in the last class. We have discussed two types of balance sheet as per the schedules of the Companies Act, and try to familiarize both the schedules. But in the most of the cases you will be asked to prepare the balance sheet as per Schedule 3, because that is a latest pattern of preparation of balance sheet. Anyway, familiarize both cases. Okay, let us go to the case. Here the company is planning to raise total of 10 lakhs rupees by way of issue of shares, out of which the company has decided to allot 10,000 shares as issued to the promoters for their services. I believe you all know what is meant by promoters. They are the well-wishers of the company. They do everything for the support and uplifting their performance of our concern. The company also purchased, yes, there is a purchase of fixed asset, land and building, for rupees 4 lakhs in the form of shares. So it is a case of purchase consideration other than cash. The balance of the shares were issued to the public. So what was the total value of the shares or capital the company intended to raise? 10 lakhs, out of which 10,000 shares of 10 each was issued to promoters, and 4 lakh worth of land was purchased. So what is the balance worth of shares that the company is intended to issue to the public? Find the answer, we will come to that. So let us begin with the computations. I'm not going to say mentioning or reminding you about the pattern of journal. You all know how to prepare a journal: date, particulars, LF, debit side, credit side, likewise. So first of all, there is not much of entries. Only thing is there is entry for the issue of shares to promoters. Another is purchase consideration, and finally raising of funds from the public. So there are only few entries, so let us post it down. First one is the issue of shares to the promoters. So issue of shares to the promoters for their services, there is a particular entry regarding that. If you have gone through the previous or the beginning sessions, you might remember the entry. Otherwise, this is the entry: goodwill account debited to equity share capital. How much worth of share was issued? 10,000 shares of rupees 10 each. So 1 lakh. Being the issue of 10,000 shares of 10 each fully paid to the promoters for their services. So first one is over. After that, the company intended to purchase. Not intended, the company has purchased land and building from Y Company Limited. So the entry will be land and building account debted to Y Company Limited 4 lakhs. Now this entry is a purchase and the land and building being purchased from Y Company Limited as per the agreement. Here it is, this is a purchase entry. Now the company has to make the payment, and in the question it is mentioned that the payment was made in the form of shares, issue of shares. So you need to pass the entry for the issue of shares to the Y Company Limited, that is Y Company Limited account debted to equity share capital. Here in the question the company was dealing with share equity share capital, so let it be equity share capital. 4 lakh was the price of the land and building, so the company issued, and the price of one share is 10, so definitely the company might have issued 40,000 shares. So being the issue of 40,000 shares of 10 each to the Y Company Limited against the purchase of land and building. In the previous class we have learned about the equation for finding the number of shares issued with regard to purchase consideration. Go through that equation. That is how you have obtained 40,000, that is 4 lakh divided by price, that is price of the share. Since there is no premium or discount regarding that, there is only par value, let it be like that. 4 lakh divided by 10, you will get 40,000. That is how here the narration is mentioning about 40,000 is mentioned. And finally you have to pass entry for the issue. Means the company mentioned that even after dealing all these activities, the balance amount of shares or balance number of shares were offered to the public. So what was the balance amount? Out of 10 lakhs, 1 lakh is offered to the promoters. 4 lakh was issued as a part of purchase consideration. So what is the remaining number of shares or the remaining value of share capital? 5 lakhs. So bank account debted to equity share capital 5 lakhs, being 50,000 shares of 10 each issued to the public. So as per the question pattern, these are the journal entries required to be passed, but our answer is not complete because in the question you are asked to prepare the balance sheet. Not only a balance sheet as per the schedule 3 of the Companies Act of 2030, that is the latest pattern. So let us go for the preparation of balance sheet. Balance sheet of X Limited asset. If there is date specified in the question, note it down, otherwise you can leave the dots like this. Particulars, note number, amount. We will begin with the liabilities. I believe you all remember the balance sheet which we have discussed previously. The modern pattern or the latest pattern of preparation of balance sheet is a vertical format. It begins with liability items. First one is equities and liability. Under equities and liabilities we will have the first one, shareholders fund. Under shareholder funds there are some categories. Familiarize all these terms. In the examination you need not have to enter the amounts for all these items, but as a pattern or the formal format of a balance sheet of a company, as a commerce students you should have idea about how to write down the details, or you must at least familiarize the terms. First one, share capital. Total is 10 lakhs. The company was intended to raise rupees 10 lakhs worth of capital. There are no reserves and surplus. Usually the item that comes under reserves and surplus is premium, security premium. Since there is no premium adjustment in this question, no need to mention about reserves and surplus. After that, money received against share warrants, non-controlling interest. All these items are not related to our area. Next one, share application money pending allotment. There is no such an item. That is actually the format. So here 10 lakhs is obtained by, see, the company was holding 1 lakh equity shares of 10 each. So authorized capital is 1 lakh equity shares of 10 each, 10 lakhs. But the authorized capital doesn't mean that the company is going to issue those authorized capital. Out of authorized capital, a certain portion of the capital may be issued to the public. That is known as issued capital. So in this question there are no other information regarding issued or subscribed or paid up. We can assume that this whole 10 lakhs is considered as the issued, subscribed and paid up capital. So it will be 1 lakh equity shares of 10 each fully paid, 10 lakhs. that is shown here. This is actually the working note. Next one, we are going to the next one. Since there are no other further items that can be stated in the liability side, just write down all these items, even though they are not related to our question. As a format for the balance sheet of a company, you have to write it down. So familiarize these terms. Finally, there is a total 10 lakhs. Actually, won't be any other item. This 10 lakhs will be shown here. So liability side is over. Next, we are going to write down the next side, that is the asset side. In the asset side also, we will begin with non-current assets. In the non-current assets, usually in the non-current asset there won't be anything, but in this question there is a purchase of fixed asset in for purchase consideration other than cash. So you need to show the value of that fixed asset here. So the fixed asset was land and building, so it will be shown on the head fixed asset, tangible asset, land and building, rupees 4 lakhs. And after that, there is another important item, that is goodwill. See, 1 lakh. It's an intangible asset. In the bracket show goodwill, or you can write down the goodwill and in the bracket you can show it as intangible asset, that is 1 lakh. So items that has to be recorded in the non-current assets is complete. And finally, but most important one is current assets. Remember, while writing down these items, familiarize almost all the items and try to write down these terms or these items, even though they are irrelevant to your question, because it is a format of a balance sheet of a company. You have to familiarize it. Okay, in the current asset there are not much of an item. There is only one item, but just like the liability side and asset side, there are some important items that has to be shown in the current asset. Only one item is to be recorded, that is cash and cash equivalents. But anyway, in the examination, try to write down these items also. So cash and cash equivalents 5 lakhs, because in the transactions, except all these three entries, only one entry where the company is issuing the shares to the public. Issuing shares to the public means the company is raising capital in the form of cash. So there is only one cash and cash equivalent is 5 lakhs. So if you add all these, you will get 10 lakhs. See, now the liability side is 10 lakh, asset side is 10 lakh. You have got a tally amount on both sides. So this is how you have to prepare a balance sheet of the company when the question specifically demands for a preparation of balance sheet, and try to familiarize all the terms in this balance sheet. Even though it is very difficult to remember these terms since they are not related to the question, try to remember and write down almost all the items at least. So this is how you have to prepare a balance sheet after passing the necessary journal entries. I believe you have understood the concept which we have discussed today, and I hope you have gone through the previous cases. And if you have any queries regarding this module, please do let me know. We will jump on to next module and let us continue with the rest of these sections in the coming days.